Okay, so you did it. You applied for life insurance. That's a huge step. But when does that protection actually kick in? It's a super important question, and the answer can be a little tricky. But don't worry, in the next few minutes, we're going to make it all crystal clear. You'd think it's the moment you sign on the dotted line, right? Or maybe when that approval email finally hits your inbox. Well, the reality is a little different. There's one very specific date that truly matters, and that's exactly what we're going to break down right now. And that magic moment is all about something called the effective date. This date, it's a big deal. It does two critical jobs. It's the official starting line for your coverage, and it sets the entire schedule for all your future payments. So yeah, getting this date straight is absolutely key. Your journey to that effective date really starts with a choice. Think of it like a fork in the road. And it all comes down to one simple thing: when you pay your first premium. This one decision sends the whole process down two very different paths. Okay, so pass number one is the easy route. If you pay your premium right when you fill out the application, boom, it's simple. The date on that receipt is usually going to be your effective date. Easy peasy. But if you choose path number two and wait to pay when the policy is delivered, well, there are a few more hoops to jump through. Your policy is not active until some key conditions are met. So let's talk about that delivery phase for a second. And I don't just mean getting an envelope in the mail. No way. This is a much bigger deal. It's an important, formal step. Your agent really should deliver the policy to you in person, and there are some really good reasons for that. See, your agent's role here is crucial. They're going to sit down with you and actually walk you through the contract, explain all the important details, the provisions, any riders you added, and then get your signature to confirm the delivery. This isn't just about paperwork, it's about making sure you feel 100% confident and clear on what your coverage looks like from day one. Now, let's dive into a fascinating little legal concept. It's called constructive delivery. And what it means is that your policy can be legally considered delivered even if you don't physically have it in your hands yet. If the insurance company sends the policy to your agent for unconditional delivery, the law might just say, yep, that counts. So, what's the difference? Let's make this super clear. If the policy is sent to your agent with absolutely no strings attached, that's constructive delivery. But if the insurer tells the agent, hey, hold on, you need to check on the applicant's health first, that is not constructive delivery. The key word here is unconditional. There can't be any pending requirements left on the to-do list. And this brings us to the final checkpoint. But remember, this only happens if you chose to wait to pay your premium. Before your agent can actually hand over that policy, there's one more form you've got to sign. It's called a statement of good health. And the bottom line is this: the insurance company needs to know that your health hasn't taken a nosedive since you first applied. You're basically signing off that you're the same risk to them today as you were back then. It's all about keeping the contract fair for everyone involved. Now, what happens if your policy comes back with a higher premium? This is what's known as being rated up. And yeah, it can be a bit of a bummer, but a good agent will help you see it a different way, that this actually highlights just how much you need the coverage, and that this might be your absolute best chance to secure it. Speaking of premiums, let's talk about a clever little strategy that some insurers allow. It's called backdating, or sometimes saving age. It's a simple trick that could end up saving you some real money in the long run. The logic is pretty simple, really. Life insurance premiums are based on your age. So if your birthday's just around the corner, backdating lets you set your policy's effective date a little bit in the past, locking in the premium from when you were a year younger. It might seem like a small difference each month, but over a lifetime, that can add up to some big savings. So, how far back can you go? Well, it varies a bit, but for most companies, the maximum is 6 months. Think of it as a specific window of opportunity that you don't want to miss if you're getting close to another birthday. Of course, there are a few rules to the game. First, your insurance company has to actually allow backdating. Not all of them do. Second, that time limit, usually the 6 months, is firm. And third, just keep in mind that your next premium will be due a bit sooner on that backdated anniversary. It's a trade-off, but one that's often well worth considering. Whew, okay, we have covered a lot of ground, from payment timing to clever strategies. So let's pull it all together into a simple checklist to help you navigate your own policy activation. All right, here are your activation keys. First, be crystal clear on when you're paying that first premium. Second, welcome that in-person delivery meeting. It's really for your benefit. Third, if you do pay a delivery, be ready to sign that statement of good health. And finally, always confirm your policy's official effective date with your agent. That way you'll know exactly when you're covered, no guesswork involved. So now you're basically an expert on the effective date. You know exactly when your policy kicks in. But that date also starts another very important clock, something called the free look period. Do you know what that is and the power it gives you? Well, that's a story for another time.